and welcome to the launch of our new report in collaboration with our long-standing partners, Giesecke+Devrient, on unlocking the potential of the CBDC ecosystem. I'm John Orchard, OMFIF CEO. G&D have been helping a variety of central banks around the world over the last couple of years to design their CBDCs. And this report is the latest in a long series of pertinent research pieces produced in conjunction with G&D. Including some illuminating work we did a couple of years ago on consumer attitudes towards the prospect of CBDCs in a range of countries, and also a study we did on the level of trust the public has in a variety of payment providers, including, of course, central banks. So do check those out on the OMFIF website. Today's report explores in the different roles and responsibilities played by a range of stakeholders in the CBDC ecosystem itself. Our economies, needless to say, are evolving at an unprecedented pace and delivering CBDCs that meet their needs at a time of rapid technological change is a strategic priority for monetary authorities around the world. It's a necessity. State-backed payment systems must, of course, be fast, cheap, secure, and above all, accessible. Beyond that, though, most central banks also want CBDCs to be a platform for innovation. Stakeholders throughout the economy, banks, payment service providers, technology providers, and merchants will need to be brought into the fold and appropriately incentivized to develop additional products and services on top of the CBDC platform to support these new areas of economic activity. And in fact, we've seen that already in a number of jurisdictions with promising results, I think. Bringing these stakeholders together isn't an easy task. Some, both at an individual level and business level, perceive the introduction of CBDCs as a threat. Central banks will need to involve these stakeholders in the conception and design processes to ensure their needs are met. And of course, many consultation groups are doing just that. And central banks will need to make extensive efforts to communicate how CBDCs can benefit all participants of the ecosystem. Via the new services that they'll be able to provide and monetize, and that will benefit the retail public. And indeed, that's already taking place as well. We're going to explore these topics and those processes and more in the report we're launching today. Before that, let me turn to Dr. Wolfram Seidemann, who's CEO of G&D Currency Technology, for his perspectives on all this and to set the scene on G&D's work in this space. Then after that, we'll hear from Katrina Liu, one of my colleagues and one of the report's authors, who will present his key findings. Wolfram, over to you.
3, 2, 1. Wolfram.
Thank you, John, for this kind introduction. Thank you, KTN, for hosting this event, and a warm welcome, ladies and gentlemen, also from my side. As you might know, G&D has been engaged in CBDC work now for many years. And we do this for a simple reason. We believe that public currency, which today is only available in the form of physical cash, must continue to play a key role in our digital world as well. A digital form of public money could reshape the payment landscape and bring real values to societies and businesses. The 21st century has witnessed a revolutionary shift in payment systems, driven by the persuasive influence of digitization and its convenience that it can offer. The rise of e-commerce, machine-to-machine communications, the advent of mobile wallets and cryptocurrencies, to just name a few examples, has accelerated a change in user behavior and created new business models. At the same time, more than 1/3 of the world's population today has no access yet to the internet or does not use it yet. But the ability to engage in digital transactions is increasingly becoming a prerequisite for participating in many aspects of society. Today, the majority of digital payments is driven by private market participants with private issued money. A digital form of cash could represent a significant leap forward in the way and the world of payments. and could potentially enable all segments of society to participate in the digital economy. Removed barriers, streamlined processes, and smart contracts within CBDC ecosystems could boost transaction speed and cost effectiveness for businesses. As a public infrastructure, they pave the way for new financial products and services by encouraging competition and innovation amongst private entities while reducing fragmentation. CBDC can serve as a resilient and secure foundation for the emerging new financial system and form the cornerstone of the digital economy. But one thing is obvious: central banks cannot achieve this alone. CBDC requires an entire ecosystem, a concerted effort from both public and private sector. I'm really looking forward now to the details that OMFIF is about to share with us. It was a great pleasure to collaborate with you on this research and report together. There's much to be done. Let's join forces to harness the full potential of CBDCs. Thank you.
Thank you, and hello everyone. And thank you for joining us for the launch of the Digital Monetary Institute's latest report on central bank digital currencies, done in partnership with G&D, Unlocking the Potential of a CBDC Ecosystem. I'm Katerina Liu, a research analyst at OMFIF, and I've been working on the report along with my colleagues for the past year, and it will be a pleasure for me to talk you all through the key findings today. To briefly introduce the report, DMI has collaborated with G&D to produce new research mapping out the CBDC ecosystem, uncovering the benefits it unlocks for stakeholders and the new responsibilities it creates. We believe that CBDC can be a powerful catalyst for economic activity throughout the economy, and we are eager to map out what that will look like. Through extensive interviews with groups comprising of central banks, tech firms, merchants, and financial service and payment service providers, we've unpacked which players may be involved in fully actualizing the potential benefits of a CBDC to the broader ecosystem, and the practical considerations that may need to be overcome to achieve this. So this presentation will cover 3 topics, roughly matching the 3 chapters of the report. First, we detail who the different ecosystem players are. Second, we outline the benefits of a CBDC and what they offer society. And finally, we explore the practical considerations of building the ecosystem. So firstly, I'll start with a quick overview of the players in the CBDC ecosystem and the benefits of their participation. So the diagram shown here is a simplified summary of the CBDC ecosystem, its players and their interactions, roughly demonstrated by these interconnected lines. First, we have the central bank that will issue the CBDC while maintaining the integrity of the core ledger. Following clockwise, we have technology providers who will perform much of the heavy lifting on the design, ensuring accessibility, security, scalability, interoperability, and enabling other new capabilities. Regulators and other public sector entities would provide the legal and regulatory frameworks around issuance, usage, and privacy. The business user would be an end user. Benefits here for them will depend on how innovatively they integrate CBDC for corporate use. Merchants in the bottom left of the figure make CBDC use possible for business users by enabling payments at the POS and online. And finally, we have financial and payment service providers who will facilitate payments and conduct compliance. And here in this table, we have a brief overview of the benefits of a CBDC ecosystem for its players. For central banks, it's an opportunity to provide its monetary sovereignty, improve financial inclusion for its citizens, and foster further innovation. Both technology providers and financial service providers should treat CBDC as an invitation to create new products and services, and perhaps reshaping their business models. For regulators, a CBDC ecosystem could pave the way for emerging digital public infrastructures that might make public systems easier to use for end users. And finally, business users and merchants stand to benefit the most from a CBDC ecosystem, which should reduce costs of payments, improve efficiency and security, and introduce new features such as programmability. Altogether, these can open up new areas of economic activity, and once merchants and businesses fully integrate CBDCs into their operations, it can have a transformative effect on the economy. So now I'll delve deeper into the benefits, exploring what else the CBDC ecosystem can deliver to its players. Firstly, programmable payments, which I briefly mentioned from the table in the previous slide. Programmable payments represent an opportunity for innovation. Seamlessly triggering payments based on certain conditions is an immensely powerful function. Not only could it reduce costs and errors, it could also make machine-to-machine micropayments economically viable, which integrates well with a whole range of potentially transformative business models, such as with smart energy grids, as an example, such as thus opening up a new area of economic activity. Similarly, digital assets and cross-border payments will become an increasingly important benefit. As the economy evolves to include more digital assets and cross-border trading continues to increase, CBDCs should be a vital part of allowing these industries to flourish by settling payments in central bank money. These features could also lead to enhanced security and access. With more simplified, streamlined, and in other words, efficient KYC processes, the CBDC can better protect privacy and lower barriers to access, which can, as a result, improve financial inclusion. However, to fully actualize these benefits, there are a few considerations which ecosystem players may have to keep in mind when designing their CBDCs. I will spend the next couple of minutes highlighting what these could be. So the key challenge lies in ensuring buy-in and adoption. This may be addressed by ensuring that all the stakeholders understand the benefits a CBDC may offer and are correctly incentivized to participate. For financial service and payment service providers and merchants, this means ensuring that they do not perceive CBDC as a threat to their business models. That requires continuous, ongoing collaboration to ensure that their design priorities are incorporated and incentives and goals are aligned. Similarly, there may be a challenge to build trust in citizens. Citizens have concerns about privacy and state overreach. CBDCs must therefore be designed to respect these with private sector assistance. So strategic communication plans, such as building awareness through large-scale pilot programs, must be implemented early in the process to build public trust. So that has been a very quick tour of how a CBDC will affect different parts of the ecosystem. A key motivation for central banks to work within an ecosystem is to foster innovation. A CBDC ecosystem can be a very powerful catalyst for innovation and economic activity where its effects could probably be felt throughout the economy. All players of the CBDC ecosystem stand to benefit from participation. However, this can only happen if it's implemented properly, and that requires collaboration across the ecosystem. So we hope to see more of that going forward. Ecosystem players should also ensure access to design and communications considerations to guarantee the success of the ecosystem and all the benefits that it will provide for its players. So thank you very much for listening. We will cover these discussions in much more detail in the report, which I encourage you to download from the link or the QR code shown here. And I'll now hand you off to my colleague Katie Ann on a discussion around these ideas.
Thanks very much, Katrina. You've left us with a lot to dive into the panel discussion. Welcome again, everyone. I'm Katie Ann Wilson, Managing Director of the Digital Monetary Institute, and I'm very pleased to be joined by our expert panel, Rodrigo Molinari, Chief Information Officer from Banco do Brasil, Wolfram Seidemann, Chief Executive Officer from G&D Currency Technology, Pallavi Thakur, Director, CBDC and Interoperability at SWIFT, and Eric Pascal, Global Head of Digital Currencies at Standard Chartered Bank. Welcome, everyone. So I want to just hone in first on the first half of the report, which is the benefits of CBDC for the wider economy and for existing payment systems. So Wolfram, I'd love to start with you first. We've highlighted that there's some key benefits that CBDC can bring to the economy, such as programmable payments and enhanced security and access. Can you just expand a little bit on these benefits?
Yeah, thank you, Katie Ann. And I think we need to zoom out a bit to fully embrace the benefits that a CBDC ecosystem brings. And Where does it come from? Basically, it comes from three elements. One, from the network effect that CBDC can offer. Two, from the platform approach that really allows multiple use cases. And three, from the joint engagement of the public and private sector. And programmable payments is just one of the potential use cases that where we can see those benefits coming. And that, of course, lies in both reducing costs and time of individual payments, but also of in terms of time to market for new products and services. And of course, this innovation part is so important. And today, we can see already a lot of possible use cases where payment versus delivery or condition-based payments, where circumstances trigger the Payment Act, can really provide the opportunity for financial intermediaries to offer new services, to develop new products, but also for the users to save on time and money. And I cannot give you the one single killer application or use case that would make it very, very visible. But I can only relate to the various work that we have done with central banks around the globe, who have engaged with the stakeholders of that ecosystem to run hackathons, to develop ideas. And one of them, which went also public, Bank of Thailand communicated about that, came up with interesting use cases. For example, one of the winning use cases of these hackathons were a grow-up wallet, where a CBDC-enabled wallet could be used to promote financial literacy and financial management skills among children and parents. Or another idea was a green wallet idea that created an ecosystem for buyers and sellers to track their carbon footprint, so they could be motivated to choose products that can reduce greenhouse gas emissions. So there are a lot of possible innovative approaches and business models that can be facilitated by a platform that allows for programmability. And similarly, you ask for security and for access. These are two more important design criteria for such a CBDC ecosystem. Of course, it has to be secure, but it also has to be private. These two elements are the key design elements and why it's so important to have a joint discussion from the very beginning of the stakeholders within the ecosystem. And same as with access. The network effect that CBDC can bring really can overcome a lot of barriers of the today fragmented payment landscape, providing access to citizens, but providing access to businesses that allow to develop new products and new services towards citizens is a key element of that platform approach and the CBDC ecosystem.
Definitely very exciting use cases, and even the ability to lower the cost for merchants, which can then bring down the cost for consumers and then even stimulate economic growth, I think is very exciting. And I think you've always said in the past as well, make the distinction between programmable money and programmable payments. We want programmable payments.
Yes, absolutely.
I also just wanted to a quick follow-up question, because I think this is a common mistake in the industry, is the association between programmability and blockchain. It's absolutely not interchangeable. You do not need blockchain for programmability.
Oh, yeah, I think blockchain is a fantastic technology that allows to digitize physical or existing business models and to reduce the amount of necessary intermediaries in complex transactions and increase transparency. It can build digital business cases. It's not necessarily the best technology or the technology needed to create CBDC, because here we have, and we discussed that also in the study on trust, we have a trusted entity, which is the central bank. They issue the currency, but that currency should be used or should be made available for programmable use cases and should be used in blockchain business models. But we don't need to have a blockchain to solve the double spending problem that allows to issue a digital currency. There are more efficient ways to do that.
Certainly. I think it's really useful distinctions to make. Rodrigo, I'd love to come to you now. People think of, Brazil as being hugely successful already with digital payments. You have your very popular PIX. And Wolfram's just very clearly laid out some of the benefits of CBDC and the economy and security. So in your specific case, why have you prioritized the creation of the DREX, and what can DREX bring to the economy that PIX can't?
Thank you, Katie. Firstly, thank you for the opportunity to discuss about the CBDC and about DREX, the Brazilian CBDC. PIX is the central bank of Brazilian instant payment platform. It operates as a value transfer solution between people and companies, and as a retail payment method. PIX is really a great success and one of the main driving of the financial inclusion in Brazil. Brings around 71 million new customers to the system. In 2023, almost 43 billion transactions were processed, a growth of 74% compared to the other year. I commented this number to try to explain the size of PIX popularity in Brazil. We know that many countries, many global CBDC projects aim to provide mechanisms to instant payments. A scenario is resolved in Brazil with PIX. DREX is not be a solution for statement payment, shouldn't replace PIX. With DREX, we want to offer customers and gateways to the tokenized economy. An estimate made by World Economic Forum project the size of tokenization economy that is $16 trillion in 2030, which equivalent to 10% of the global GDP. Considering the study, the tokenization of the economy will be a large and rapidly adopted movement, which global central banks must prepare to incorporate. For the reason, we are developing DREX, the digital version of our currency, the real, yes. Well, the DREX will be operated on the platform supported by blockchain technology as well, where we be able to see the operation involving tokenization assets, in addition to be possibility to exploring the benefits of technology, such use of smart contracts to incorporate innovation, automate process, reduce the need to intermediates, and improve efficiency of financial operation. These benefits can lead to a reduction in cost and thus enable most customers to access financial service. If on one hand, PIX were largely responsible for the financial inclusion of customers. On the other hand, you want DREX to be largely responsible for the democratization of access to financial service, and for both to operate together to achieve this objective.
So DREX will be both a multi-purpose retail and wholesale CBDC complementing PIX.
Yes, I believe that CBDC improving all the service about the financial system, but much more than offer new service. Maybe in Brazil, that smart contracts is one of things that is so important because our system is not so easy like a country. The other possibilities that CBDC improve our financial service is not about instant payment, but much more than.
Yeah, no, definitely. I think many other countries are following a similar path in terms of looking for CBDC as a settlement asset for tokenized securities and new tokenized markets. Do you think, though, you will release the CBDC for use before you see tokenized capital markets, or are you waiting to see more evolution in those financial markets?
I believe that's a big evolution of financial market. Yes, in Brazil, it's the bancarization is the most part of population is bancarization. The PIX introduce a lot of new customers, and this problem is not the target for DREX. The targets for DREX to offer new service like a tokenization service, like a smart contract service, like a program money. We have some today it's a problem, but in the future maybe that's a use to DREX to resolve a lot of problems to program money. I believe that is a big challenge for us and a big target for the DREX in Brazil.
Certainly, this ability to transfer simultaneously money, property, titles, taxes, all things like that on the programmable side. Now, let's jump to the cross-border payments world. We have two excellent experts on here. Pallavi, I know, has been working on some exciting work on SWIFT, on CBDCs and cross-border payments. Just yesterday as well, the UAE, I think, settled its first cross-border payment with China using CBDC. So clearly a lot of work is underway on mBridge and the other CBDC projects. So Pallavi, can you tell us what are the benefits of CBDC for cross-border payments?
Right, thanks, Katie, for having me. I think that was an easy question, which was already probably answered by Wolfram and Roderick. What's the benefit? Yes, we are aiming for a less expensive, faster payment, something which is instant and atomic in everything that was mentioned on the call. But at the same time, keeping in mind that cross-border payment just doesn't require it to be instant and cheap and all. There's a lot of things which goes in cross-border payment in terms of checking whether your end beneficiary is the right one, whether you're sending the payments for the right reason. There has to be sanctions and screenings and things like that. So from a SWIFT perspective, what we want to do is that, yes, we want to enable cross-border payments in CBDCs, or for that matter, any form of digital currency, and regulated digital currency is what I would say. But at the same time, keeping in mind that they need to be thoroughly checked, make sure that it's going to the right beneficiary, making sure that, irrespective of the technological choices of the country on which CBDC is issued. I just heard Wolfram saying you don't need blockchain, and we had Roderick mentioning that, there is a blockchain. So for us, it does not matter whether it's blockchain-based issuance or a non-blockchain-based issuance. We are here just to support CBDC payments from one country to another.
Eric, from Standard Chartered's point of view, where do you see, or in addition to what Pallavi just said, CBDC is providing new added value benefits? Have we missed anything else? And also, what can it not address? Because I'd like to also touch upon the FX conundrum and what we can't address so far with CBDC and cross-border payments, because I'm slightly skeptical that it can solve the enormous challenges that we've been working on for years and years, but confident that it can make small incremental changes.
Well, that's a lot. But first, thanks, Katie and Wolfram for sponsoring this event, which I think is extremely topical, timely, and important for global financial systems. So look, to give you, I think, an unpacking of what you've just asked, and round up the comments from my esteemed colleagues on this call. I think first the benefit cases that I'd like to expound on will reflect kind of our position, and certainly selfishly from our view, or my view within Standard Chartered Bank, is one of wholesale and one of effectively large-scale commercial MNC businesses who, by definition and by construction, require cross-border abilities and the ability to move money fairly quickly. Now, did you know that 30%, and we have research for this, not from the bank, but from independent sources, 30% of corporate cash around this planet sits idle at any point in time. And guess what? Yeah, that's a wow, because that money is expensive. Liquidity, by definition, is expensive. So there is reason number one for moving into an operating system on a global basis that allows for payment and settlement effectively. And we don't want to say instant, but let's say real time, but really more JIT. Yeah, so I think, again, there's research around the world that our customers in the corporate wholesale space don't really care about instant. That's really not their use case and where they're getting value. They're getting value by having almost a JIT, a just-in-time type of process that allows them to put money where they need it when they need it, effectively anytime, anywhere. So from a payment perspective, and I think most of you on this call have heard me say this a million times, but we see M1 on chain. So corporate bank customers, in my case, certainly claim on the bank, exist in a digital tokenized form that allows for that transfer effectively real time, anytime, anywhere. Now that's payments. The other end of that machinery, so to speak, is clearing. So as we all know, clearing of payments in the respective currencies can take place only in the central bank, in the issuing authority of that currency. Yeah. So there are a number of issues with that in itself that presents for the frictions that we're all talking about. Yeah, issues of time, complexity, cost, etc. So by virtue of clearing taking place through a central bank, it means that banks that have relationship and accounts with that central bank are able to provide the clearing. So that's issue number 1.5. That, in other words, you need to have relationships with a whole bunch of banks in order to clear across different currencies, again, by construction. Number 2 is the effect that how that machinery in each geography operates. They're not 24/7. None of them are. Not unique. And by definition, you have cutoff times. So even if the clearing systems were closer to 24/7, and we have a couple of economies that are about 22, 5.5, et cetera, but the main issue then remains of being able to manage the times at which the markets transact. So again, there's cutoff times, there's opening of clearing systems, et cetera. That creates significant constraint over the movement of money, and especially across border. Now, you brought up a really interesting point. So Pallavi and I just got off a call a couple of hours ago discussing work that SWIFT is doing and creating interoperability between CBDCs. Very important work, because frankly, that CBDCs can't operate in a vacuum. You know? Not just the choice of protocol, but obviously the choice of relationship and policy with respect to the central banks from a domestic point of view, but also in terms of how they are managing and shall we say, fiscal and monetary policy instruments found in CBDCs. So there's 2 critical issues. Number 1 is the availability of a connectivity, effectively, between CBDCs, so that ePound can be easily transferred to eThai or EUSD, et cetera, et cetera. Yeah. Now, the main issue, I think, for most of us and most of your audience, I think, is never technology. It's almost always the ability to generate business models and commercial applications, and in this case, liquidity in those markets. Liquidity will come from commercial banks in this space. And that's not just in terms of the bare bones, let's call it single currency, CBDC movement across borders, but FX as well. And you brought it up, Katie, and quite intuitively, I think this is the elephant in the room, and this is an enormous issue for solving the scalable implement of an operating system using CBDCs across the planet. There are just south of $8 trillion equivalent a day of foreign exchange transactions on this planet. Yeah,
Do you think
that's an enormous number.
Sorry to interrupt. Do you think that any of the Are we close to solving it though? I know this. I'm losing track of all the different names of the BIS, all the projects throwing out all the different names that they're coming up with. Mariana, I think there was another one quite recently.
Well done.
Talking about automated markets, decentralized finance tools. So just on that FX point, do you think we're close to solving it? Pallavi or Eric?
That's actually what I was just going to say. So thanks for the lead in, Katie Ann. That's well timed. The short answer is no. And this is one reason for which I think CBDC cross-border scalable operating systems are going to take a while. The main reason for that is exactly what I was going through. It's just south of 8 trillion USD equivalent a day in this market, and it's one of the most efficient, frankly, from an arbitrage-free point of view and operation of financial markets. But where does that market function? And I know for most of you that have worked in this industry or been involved in structuring FX in any form in terms of capital markets, no, we've tried. I mean, the industry has tried to create central counterparties for FX clearing and failed for 50, maybe 60 years. Yeah. Why? Because there is an enormous, and I can't stress that enough, enormous incentive pool for commercial banks to continue to effectively operate that market. So that's where I think the rubber meets the road, so to speak, in respect of the main issues. But for cross-border scalable CBDC, the one element that I think is sometimes overlooked is the ability for that marketplace to expand, given a both push and pull set of factors. So one of the critical components, as I describe payments and clearing as two components of a cross-border world of financial movement and capital movement deployment. From a corporate point of view, we talked about the 30% of idle cash, which is very expensive from a financial institution. Then let's call it institutional capital, asset managers, investment managers, SWF, sovereign wealth funds, and what we call real money accounts in the institutional buy side part of the capital markets. They are extremely interested and invested, frankly, in access to an asset class that allows them to generate fungibility across those asset classes, and hence the ability to generate returns. And yes, I mean, Wolfram's absolutely right. We don't need blockchain for most of this, but we do need the ability to manage, clear, and move enormous sums of capital when we need it. We meaning the financial industry, right? And not when the central bank is open, if you see what I mean. So still significant, obstacles, but I think the capital market use cases will create scale in due course. Hope that helps.
Yes, and it sounds like it's not actually a technical issue. It's aligning business objectives, KPIs, things like that. And actually, yes, CBDC might be the calling card to get people governments to align, central banks to align better. So I want to go back a little bit and look now at the changing roles within the new ecosystem, both on a cross-border and retail level. Wolfram, you mentioned at the start, obviously, the key role that the central bank will play in managing the platform. The Bank of England as well, I think, released their consultation paper findings yesterday or today and discussed and had responses from the population that people were still concerned about privacy. The platform model solves it to an extent, as you highlighted, Wolfram. But I just want us to address, is that enough? If we've solved privacy by design, is that enough? Do we need to also say, not just we can't access your data, but we promise you won't access your data? Like, is there sort of a piece here which the state needs to lead beyond providing the platform, perhaps an education piece? So what kind of, apart from providing the infrastructure, do you think there's other things that the state needs to lead on?
Yeah, well, this is the core of the debate that is currently going on, and thank you very much for addressing the topic. And I'm very pleased to be on a panel from various stakeholders, actually, of that ecosystem, because we need to bring our different perspectives into that debate. And My personal view is that the central bank, who's a state body, should engage only where markets is failing. And that means it should bring them back to the minimum necessary to fulfill their mandate. And their mandate is stability, is ensuring trust for the currency. Yes, also to drive innovation, since that may be part of their policy objectives, but then also rely on the experts that we have in the sector. The financial sector has a lot of experience and developed good practices that are also relevant in a CBDC ecosystem. So clearly, I believe the responsibility of the central bank is to provide the payment instrument, so to issue the digital currency, and allow everyone who wants to use it to ensure its authenticity, to make sure that you can verify the value that I just received is authentic and it's central bank money and I can have it risk-free. Other than that, I think it's just about to set some rules and guidelines to provide a solid legal and regulatory framework, maybe also to work on education and awareness. But other than that, driving trust and confidence in the entire ecosystem, but leaving to the rest of the stakeholders a lot of responsibility and also a lot of possibilities to come up with their business models, with their products, with their solutions, where there are incentives to engage, because that's the key element that is required to bring this all to life. So I think that's a whole bunch of areas where the central bank can be the guiding lighthouse, so to speak, and provide the base infrastructure. But already here we need to start sharing investments and leaving room for the private sector to come up with products and solutions and services. And to make that a little bit more tangible, just to give a simple idea, the instrument, the money itself, which is not programmable because we need to have trust in the currency, that mustn't be changed after it has been issued. The money is issued by the central bank, but the wallets should be issued by commercial players, because here's where programmability comes in. Here is where a value proposition of the issuer of that wallet comes in. Here's where business models are reflected. Here's where the financial service providers can agree with their consumers how much data is being shared, because that's part of a business model. That's not a question of the integrity of the payment instrument itself. And by applying these rules, I think we can develop a much more mature ecosystem that really allows everyone in that space to have their incentives and their position, and altogether then providing the value and the benefits to businesses and to society.
Yeah, no, I think that's a really clear response, lays out a really good roadmap for both sides, public and private. And I remember your Binsal said to us, Wolfram, that he wanted the digital euro to be successful, but not too successful. So being very careful to not crowd out the private sector.
Well, they have to be super successful in providing the platform. They don't need to have that end-to-end success, because that's not their role. CBDC is not a project to provide an end-to-end payment solution by the central bank. No way. It's the platform that should be deployed that allows market participants to develop their products and solutions. They have the contacts to the consumer. Yeah. So that's why we need to define success in a different way.
Yes, no, definitely. There's a careful balancing act that central banks have to undertake. And then your education piece, I think, is also important. I think this is where if we solve the technical privacy issues, there has to be another education piece on what you've just explained, that they won't touch the data, the private sector will carry on doing what they're doing with the consumer identity information. So it's huge, and hugely, I think, political conversation that will be carried out this year, but what you've just said, I think, should be explained to people.
I'm sure that my fellow panelists will chime in that we need to talk most probably more about what CBDC not is. because we have so much misconception around in the marketplace already what it all should be.
Yeah, Pallavi, go ahead, or Rodrigo.
Oh, I agree. I absolutely agree, because I remember here at Waterloo Station, there was this big poster which was like, say no to state surveillance tool and things like that. So I think there is a huge piece of education that needs to be done by central banks and for that matter, the ecosystem together, because I don't think so it will only be central banks doing it. I think we as individual, we as organization have to go out and let people know what does a digital cash really mean, and how, and like, basically bust some of those myths around. And that's unless and until you get grant support, there will not be an adoption. And for we to get an adoption, how much ever we talk about models and all of that, there needs to be an adoption. Somebody needs to be tempted to make a payment in CBDC, or a digital pound and a digital euro, than some other, and that will come only with education.
But Pallavi, if I may, it's quite useful, I think, as a perspective. And I think when you look at other research that we've seen that points to adoption as a significant risk that is proposed, shall we say, by central banks as the reasons for not embarking on large-scale CBDC projects. Among other reasons, there's macro policy issues as well, and the multiplier effect that is potentially impacted. But we do see this, I think, in all of our geographies at a kind of retail domestic level within various economies. In fact, there is one central bank that has decided or at least thought about embarking on a process that would make the CBDC in their currency, and I won't name the central bank, but anonymous. They want to address this issue that people are scared of surveillance, or let's say reluctant to use this form of cash as a result of surveillance, and surveillance not just for the sake of knowing where your money's going, but also taxation related concerns or impacts. So would love to hear Rodrigo's view in terms of the success of PIX in the Brazilian real economy, because it sounds like that is one that is getting some traction in terms of domestic retail at the very least.
Yes, I think that's the PIX is a successful, one of the reasons that's successful. That's explain about the population in easy words, how really to use the instant payment. That's I believe that's our challenge for DREX or for CBDCs around the world, and exactly that, how to explain the main challenge to gain public trust and knowledge about the usefulness, and to need to overcome distrust for they are safe, transparent, and above all, that they guarantee to privacy of customer data and transactions. When to explain for the population how exactly how to use it, how to achieve new solutions or new perspectives for the financial system, but not about technology, but about business models. I believe that's one of the reasons of the successful of the PIX, and I believe that is a challenge for the CBDC and DREX. CBDCs must be protected from external interference of development with transparency and rules and scope of the action by regulators. The technologies using their development must be stable and contain elements that prevent cyber attacks and avoid losses for customers and banks. And a very relevant challenge is insurance, the privacy of customers, and the confidentiality of these operations. To achieve this, mechanism and solution must be incorporated that prevent to expose the data the third party who have access for the platform. I believe that it will be to be the other participants of financial system to provide customers with innovative products, and that communication in a simple way the benefits of using digital currency.
Yeah. No, thank you. And you're right to raise security. I mean, while we're talking about the benefits of winning over consumers, I'd love to just ask Eric and Rodrigo, what about commercial banks? How do we combat resistance to CBDCs in commercial banks? Is there any? And are there any incentive structures that you think would work, or compensation models? How is that conversation developing? Eric.
You sure you want me to go first?
No,
I'd rather
I
hear
did.
from Banco do Brasil. No, please go ahead.
No, we
Rodrigo.
start. Okay. They may be, I believe that is not resistant, but sometimes some skepticism. Sometimes there may be skepticism among participants in the financial system, especially those operation countries where there are already consolidated payment infrastructure and which are not ready to operate with CBDCs. The slow adoption of digital currency can be believed as there is too many uncertainties and gaps about how to regulate and supervise CBDC, especially in relation to privacy, liability, interoperability, and coordination between authorities. Other aspects that can reinforce, not resistance, but sometimes sets it, is a belief that customers do not know the real usefulness of CBDCs and that current payment solutions are already good enough to be adapted or replaced. I believe that this resistance or skepticism can be overcome with the gradual and collaborative development of CBDCs with the participants of the government, central banks, regulators, financial service providers, and other participants.
Yeah, pretty solid, Rodrigo. Thank you, and agree. I think just from a commercial bank perspective, so as a practitioner, there are issues, or at least questions, shall we say, from the point of view of responsibility, economics, regulatory responsibilities with respect to obviously sanction, AML, KYC, CTF, et cetera, that continue to exist. Yeah. So where we have customers, or shall we say holders of CBDC that suddenly become our customers, right? That triggers a whole lot of these issues. And so questions in terms of the cost of running those kinds of screening efforts with respect to participants in the ecosystem that are not customers of the bank, and therefore, question marks in terms of how that might work, and whether or not the regulatory infrastructure changes as a result of those kinds of responsibilities. So that's why I wanted you to go first, Rodrigo. But I guess the main or one of the potential solutions could be something that we've seen in other forums and in other use cases relating actually to a federated model, right? So a federated system of application of these rules and application of the costs and so on across the financial institutions that will end up holding those responsibilities and performing those tasks, obviously for the in the interests of financial stability in that ecosystem and the broader functioning of the financial markets. But there are examples of that kind of federated structure, and I'm not saying that's the solution, but there are attempts at least of trying to generate that applicability across financial institutions that participate, and they'll share information. And that, again, for commercial banks, that doesn't come naturally, but there is, I think, a role for the regulatory infrastructure, and in this case central banks, to enable that. As Wolfram said, completely agree. It's the enablement of the process systems and even policies in this case. I mean, from our perspective, we are already speaking to clients, to customers, about generating a B2B2C model or even a B2C model where they are creating the incentives for their customers that are generated within a CBDC. So the CBDC operates, as you know, as a smart contract, and this potentially where there is value. And that smart contract then defines the reward mechanisms. So we've all seen frequent flyer points and so on, but applied to a whole raft of different businesses, where you've got SME or even, shall we say, larger commercial enterprises that are very interested in creating the stickiness to their customer base. And this is one way to do it, or that basically becomes an automated application of a reward system that can be then turned into effectively a form of currency with smart contracts. And I'm sure, Rodrigo, you guys have thought of that and started going down that road. But we are, exactly as Wolfram said, we are saying, okay, infrastructure's there, we have rails, we will now be able to add to those rails, and by adding, I mean creating products. And this is an example of a product where we're seeing enormous interest from our customers that are actively pursuing ways to appeal to their customers. And this is, for our corporate customers that are, large scale and across borders, they don't really care if it's a CBDC or something else, right? Fundamentally, what they want is they want a tool that allows them to reach their customers, keep their customers, and generate greater flow with their customers. So I think there's we have to be somewhat selfish in terms of how we see these applications, but they have to have commercial value at the end of the day. Anyway, I'm sorry, I could go on for years, guys.
I think before we move on, we've got quite a lot of questions coming in on the cross-border point and interoperability. Wolfram, have you got anything to add on the incentive structure or the business model development that Eric mentioned before we move on to interoperability?
Yeah, because if I put my corporate hat on and ask my treasurer where my liquidity is, and if Eric could offer me a product which is based on settling with CBDC, I'm happy to share some costs with him, because I can improve my liquidity. If it holds true that 30% is sitting idle, there's huge possible incentive that we can create. So I absolutely relate to that, and I really look forward to not only retail CBDC, where the benefit is for the citizen and for the unbanked, maybe to bring them into the banking system by providing them offline solutions, but also from a corporate perspective on the wholesale element, where now there's a lot of discussions about a need of setting up stablecoin solution, which is private money issued by private players, just for the same purpose what a CBDC could deliver as well. And that's why I referred to the potential that CBDC can bring, is that network effect, that not everyone has to develop its own solution and issue a fragmented stablecoin landscape, but use the central bank money for that and build products and solutions around it. So I see a lot of potential there.
Yeah,
I've got to jump on that, Wolfram. I'm sorry, Katie Ann, but this is near and dear to my heart, and that's
can run
exactly
over a
how
bit. It's fine.
we see the evolution of this let's call it broader ecosystem. CBDCs, honestly, cross-border scalable to us, and I think a lot of participants, is a way off, right? Measured in years. So not with respect to solutions, but potential alternatives. Exactly that. We see stablecoin as a bridge to that operational clearing ability that for which we don't need or don't want to wait for central banks to be open. So well said. That's where I think M1 on chain operates effectively, while we wait for M0 to get on chain on a cross-border and scalable basis. Sorry, I'll be quiet now, Katie Ann.
No, very good. Pallavi, we've got a question that I think is best geared towards yourself, which is, how do we expect international financial players and different geographies to integrate different CBDC networks and with existing systems? So I think this is a great opportunity to address some more of SWIFT's work.
Yeah, that's a very good question. And I think before I address that question, let me just maybe remind people as to why was SWIFT formed. SWIFT was formed 50 years ago precisely to solve the problem of fragmentation. 50 years ago, when people wanted to send payment from one country to another, and instead of having these bilateral connections, like, there was a need for standardization. And I think today in 2024, we are staring at the same problem. We are staring at a problem of fragmentation, where every country wants to have own CBDC system. And I wouldn't say just CBDC, let it be an instant payment system or whatever, right? Basically, these systems are coming up. And they don't inherently talk to each other. You gave an example about UAE and mBridge, right? With all due respect, that's a bilateral connectivity. If we try and go back to bilateral connectivity, you just do the maths. One country into 200 times, it's not scalable. And that's when it comes back to like, what do we need? Do we need bilateral connectivity? Can we kind of come with some sort of a arrangement where we may have like a hub and spoke model or something like, something different? And that's what SWIFT is trying to do. Our mission statement hasn't changed. Our mission statement of providing instant frictionless payment is there. The only thing is that today the platforms are different. So the work that we are doing at SWIFT, and Eric knows what we've been doing together for the last 6 months, is identifying what does it take to connect these different CBDC systems. And as I mentioned, agnostic of technological choices, agnostic of whether it's M0 or M1 on the ledger, or whether it is a ledger or not a ledger, or whether I am sitting here with the digital pound in my hand and Eric may be in Singapore with just a traditional RTGS, I still need to send him money. So for us, it's all about interlinking and ensuring that payment flows, right? It is still instant, it's still frictionless, it's still cheaper, it's still efficient. It goes beyond the operating hours. Somebody should, like in today's day and age, I don't think so anybody should be waiting for the system to come up and running for a cross-border payment to be credited to their account. So I think that's what we are working on. We're working on like making sure that everything comes together to ensure an instant frictionless payment.
Yeah, I think your point on moving beyond bilateral towards
Yes.
is really important. I mean, we're also seeing quite a lot of regional blocks, I think, develop, which again needs connecting. But yes, SWIFT is well placed.
Sorry, Katie. And that's great, because I think the way the world is going at this point of time, we will see these regional blocks coming up, right? For good and bad reason. But the thing, there still needs to be connectivity. One regional block needs to talk to another one block, or that matter, forget block. That one block needs to talk to 10,000 other financial institutions around the globe, right? So we would still need something sitting in between. And I just think that we are staring at the same problem of fragmentation.
And sorry if I may, Pallavi, this is a great piece to key on, because as you all know, M1, right, in the form of, there's a few different forms, but let's call it, tokenized deposits or variations thereof, exist now in various, kind of forms and through different infrastructure networks. So interestingly enough, and you all know who they are, but they each have effectively a mutually exclusive set of commercial banks behind them. Yeah. So by definition, we're already now embarking on a process and a series of infrastructure that is going to create fragmented liquidity. Right now, for a commercial bank, you guys all know liquidity is expensive, right? You know what LCRs are and how we need to manage HQLA on a daily basis, in fact, multiple times a day. And it's not just a regulatory issue, it's just, comes down to the TCOL, the total cost of liquidity. So those numbers are enormous. And if we are now embarking on a process by which we are now creating greater liquidity fragmentation, that's a pretty short discussion, right? So the great connector of commercial banks, this is your plug, Pallavi, is SWIFT, right? So we need that connectivity to do not just connection of commercial banks, and Pallavi, take this the right way, but you guys or other systems have to be in a role to connect these platforms, these pieces of infrastructure, these rails, and what you're doing with CBDC, expand that to M1 across these different platforms, and we will have for the first time, I think, in history, the ability to get central banks to pool liquidity as opposed to fragmented. Sorry, guys.
No, that's a great point, Eric. And I think the whole essence that this report wanted to capture was, and I think as part of the presentation, is like, what are the changing roles? And the changing roles are that, banks will have to adopt, new players will come on board, right? The ecosystem will change. The ecosystem will not be as it is today. And for that, we need to facilitate, if that means providing connectivity to, new payment service providers and all of that, yes, we will have to do that to make sure that, there's a level playing field and everybody benefits.
Yeah.
Sorry, am I hearing Swift is going to go on chain? Is that what? Sorry,
No, Eric, we've been on this conversation. No, Swift is not going on chain. I think Wolfram very nicely mentioned that for CBDC, you don't really need a blockchain. Yes, there are benefits. We can take inspiration, and to be fair, all these inspiration does come from the blockchain DLT industry.
Sure.
But I think it's not about blockchain and DLT and non-blockchain. It's about what are we trying to solve.
Yes, that's an excellent point, I think, to end on. We need to come out of this binary one versus the other. Similarly, with the new development of the different players and the roles, people are working with fintech, working with banks. We're not seeing so much disruption versus non-disruptor anymore. I think that's an excellent point. Wolfram, I want to give you an opportunity to end. What key messages would you like to leave the many sort of central banks and other industry players in the audience that are listening today?
Yeah, well, thank you very much for that pleasure to address some remarks. And thanks for all the panelists to really provide these relevant perspectives from the various stakeholders in the CBDC ecosystem. I think we addressed a lot of important messages already during that discussion, which I think needs to move forward. And that can only be achieved through dialogue. So I thank OMFIF for the possibilities to bring us together and for our joint research also that we do here. And in many of the discussions with central bank, I've heard one statement, which is, we want to do it right. We don't need to be fast. However, and I think it's all true, and central banks, they need to look at the risk side of that equation as well. However, I want to encourage you to look into the paradigm of digital business. And here, to be fast is part of being right. And if the central banks don't engage now, I think we are losing this fantastic opportunity to create the benefits and to create that in an efficient way as now this infrastructure is being built. And in the digital businesses, I mean, you can judge that from yourself. We were all on one messenger, which later on was bought by another big tech firm, but we all continued, although the terms and conditions completely changed. Because once you have your friends on the system, you don't want to lose it. So grabbing land in digital business models is a key thing. And that's why I only encourage central banks to do it right, yes, reflect well, and do that by engaging in dialogues with industry, with the financial sector, because there's such huge resources and also knowledge around. But do it fast, because we're designing now the platform for our future. And that's a great journey. And I can only invite you to stay engaged in this dialogue, do experiments, and reach out to us, because we're happy to deploy new ideas on that journey. Thank you.
Thanks, Wolfram. Yes, grab the land. Go quickly on this, I think, is the message. Do lots of pilots, share lots of lessons learned. Thank you so much, Rodrigo, Eric, Pallavi, and Wolfram, for the really, really useful, excellent discussion. I wish we had even longer. And to the audience, please do download the report. There's some links in the chat box and on the webpage. And do let us know if you have any thoughts or feelings or areas that you want us to address. And thank you for continued engagement in this conversation.
Thanks, Katie.
Thank you.
Thank you, Katie.
Thank you. Big pleasure.
Thank you.